Good morning, a weekly update of the stock market. I'm Rich Potts for Critical Point, Thursday, Jan 9, 8:03 a.m. Eastern Time. Let's begin with a snapshot before we move to short-term and then take you on to intermediate to long-term analysis. The snapshot is the market should have topped yesterday for the cash market for level 4, perhaps for the futures, or perhaps during overnight trade. Right at the moment, the futures are not doing a whole lot of nothing. They're just sitting there as if they don't know what to do. And on this 6-hour chart for the futures, we have an indicator right at mid-range. That's a pivot point. It can go either way. It seems to be quiet as if they don't know what to do. Best forecast is the level 4 intra-week swing should be down today into tomorrow. We'll look for a bottom tomorrow. We'll look for it to go up from tomorrow into the next day, okay? Now, the problem is when we look at a variety of technical indicators, the market's oversold enough that the downside ought to be limited, and we're questioning how well will that level 4 swing work. If we see trade below the overnight low of 59.29 and a quarter, that would increase confidence and perhaps probability that the forecast is correct. It's going lower still. And then, of course, all the evidence we need of a level 4 swing, but maybe too late to do anything about it, would be trade below 59.17, yesterday's low. If by chance it starts trading above 59.60, we may have an issue here that it's trying to do the opposite of what we're forecasting, but we really won't know for sure unless it trades above 59.71 and 3/4 today, okay? Ideally, the level 4 swing should be down. Problem is we're not dealing with the best conditions here to be down. This market may be trying to base build here and needs to actually go up over a longer period of time. All right, now, level 3 trend. Believe a level 3 bottom was placed January 2nd, rallied into a level 3 top January 6th, and the level 3 trend is down into next week. So we believe these level 4s, even though they can have some sudden large spikes higher, they ought to actually work lower over time and be lower next week is the best forecast. Unfortunately, we still have some lingering alternate forecasts giving us some issues with a level 3 trend, okay? Now let's go to the hourly chart and we'll move on now with market analysis. And so what we have is yesterday the market dipped into filling the gap, okay, that was made on January 3rd, I believe it was. And it filled this gap already and fell apart. And now they're thinking maybe we've cleaned up all the gaps and maybe the market's just range trade and it's ready to head higher. And on this hourly chart, we have bullish active momentum and indicators, but it's also getting close to being overbought. Here again, don't know if it starts trading to 59.40, going to be concerned, are we missing something on that level 3 trend? Is it ready to rally more than that? Whereas if it takes out yesterday's low at 58.74.78, it's likely level 3 trend is extending lower into next week. All right, so not a lot of help here to help you with this day trading, interweek trading. Not much help from the intraday stuff. It can be sloppy. Now, this is the daily chart of the S&P 500 cash. And the model's saying that was probably a level 4 bottom yesterday, then there's a level 4, and there's a level 4. And as we look at the sequencing of these level 4s, if by chance this was a level 3, then it ought to bottom now and it ought to be higher by next week instead of lower. But the model's still saying we didn't have an issue of a shorter than normal level 3. In other words, it's saying the real level 3 bottom is right here. Okay, January 2nd, not December 20th, because this would have been rule violation and it didn't take long enough. Pattern-wise, it looked like it did it anyways, but we're saying there's just enough information to suggest, no, that's not a level 3 bottom. That is a level 3 bottom. Therefore, this must be a level 3 bottom. Okay, so, but the model's also saying that ought to be a level 3 top. Not there. Okay, we have issues that there's these alternate scenarios. We can be wrong. This market's going to be higher in the next 1.5, 2 weeks, starting now. All right, but what's the best forecast this morning? That they can blip it up maybe today, but it ought to be down over time, and it really ought to start down now. That it needs to go down and test this recent low, ideally take it out, and it probably is going down to the 100-day moving average at 58.17, fill more of this gap back here. That is the best forecast. I'm just warning you, we've got things that says we're wrong. It's going to do the opposite, and it does appear to be just stuck in a range here where they really don't know what they want to do farther out in a significant manner. That may just be roller coaster sideways, bouncing around for some time. All right, let's go to the daily chart of the futures now, and we can get a little bit of an idea of what's going on here. Overnight, there it is. It's an inside day. It's trading between the low and high of the prior day. And the model is saying, well, if it didn't top for level 4 yesterday, it ought to be topping right now. And it's just saying, if that's a level 4 bottom, so what? It ought to go lower in tomorrow, maybe even into Monday. And it ought to go lower into next week for level 3. That is still the best forecast. It ought to do this. Unfortunately, we've got some things that are saying this has been a weird market here for about 1-2 weeks. They can't quite make up their mind what they want to do. They're doing something. All right, they knock it around. Somebody's trading, somebody's doing business, but it's as if they really don't know how they're going to handle us. And I think some of this has to do with waiting on Trump getting into office and start signing bills and start doing things versus Trump talking now versus where are we with the actual economy and business, which is still doing good, but there's cracks within the data. There's something not so good about what's going on with the economy. Now, yesterday we got the Federal Reserve notes, and it appears at the last meeting of the Federal Reserve, they were more of them were more concerned of rising inflation than otherwise, but they lowered rates anyways because they're also concerned of the economy slowing down. So they want to help out to make sure it doesn't slow down too much and get away from them, get away from us, and it breaks. At the same time, they're concerned about rising inflation. They are concerned about Trump's tariffs. All right, weekly chart. This one makes me feel more comfortable we're on the right track. The daily, not so much, and the intraday makes me nervous. We really don't know what we're doing on a day-to-day basis here. But part of that is because the market really doesn't know what it's doing. It's not the model's fault. It's not bad data necessarily. It's just slushy, mushy data, okay, of what they're doing. All right, this looks like a pattern of a level 3, in my opinion. It could go higher in the next week, then down. From the bottom, it ought to go down in next week, but it could go up in the next week, then down. But as we look at the daily, it doesn't quite make sense for that, and along with the intraday. I think it started down. We got a negative week reversal. That's what you want to see if you're dealing with a level 3. I think it's working, but maybe if they ram it hard, higher, right into the close tomorrow for the close of the week, we may have a change of attitude. And that may be that they just have a change of attitude. Again, I don't think they really know what they want to do. But I think the bias is bearish. The 5-week average is rolled over. Therefore, it's providing technical price momentum proof of our forecast weeks ago of a level 1 top, and the trend ought to be down a level 1 bottom. Okay? They bounced it back to the 5-week average, couldn't sustain it, couldn't get back above it, and we're getting close to finishing the week here. We're going with the idea this market's going down into this little 2-week bar right there. That's what the model's forecasting for a level 3 bottom, that it bottoms next week or the following week. Okay? Problem is the model is acknowledging it may actually go up in the next week, then down next week, okay? But for the moment, it looks like the best forecast is down into next week and maybe the following. We'll then get a blip up for the next level 3, and we don't know, will it be huge because we have put in far more important bottoms and the trend is up for weeks to come? Or is it actually going to be a weak bounce and then more downside into the next level 3 bottom? Okay, so the next level 3 bottom is slated for this 2 weeks right here. Now, we don't know how well, this one here we may have to adjust because of when does it bottom, week 1 or week 2 for that one. That will change this perhaps by a week. Okay, now, the reason we're showing to, the reason we're gambling or going out here for this second one, which is more difficult to forecast, is that when we go from level 4 intra-week to intraday pops and drops to level 3 uptrends and downtrends during a month for a month, okay? When we go to the next larger trend, which is level 2, and even the larger level 1, which are combining right now, doing the same thing, what we have is the level 1 trend topped last year, has come down, and might have bottomed last week, okay? But it's allowed not to bottom until the week of February 3rd. So things might turn bullish, bearish, and finish bearish. And overall, this could work lower right into early Feb. This may have to do, they don't like what Trump starts doing right off the bat. It may have something to do with more of the economy and business and not Trump and Congress. We don't know yet, okay? But there's a lot going on the Trump side, a lot of it. And a lot of it people are laughing about. They think it's ridiculous. But there's things that are actually going to be done, going to be policies, and they're going to be signing papers on January 20th or whatever day that Trump starts. So things could get rolling pretty fast, okay? Now, the market did pull back to our fair valuation, and we're saying fair valuation is stalled. The market doesn't really know what to do in terms of fair valuation. We think it should go below fair valuation to make it a little undervalued. Relative to this very fast type of valuation. Some people would say that it's too fast, that it's really just another technical thing we're looking at. I'm fine with that. It would just mean oversold market. That's fine. I think oversold sometimes is the same thing as undervaluation. We have this weekly indicator trying to turn to a buy signal, even as the market's going down, hasn't quite got there. If this market moves a little lower into tomorrow for the close of the week, that could move away from a buy signal, and it could still work lower toward oversold. So until we see the market trade above this week's high, 6,021.04, we're going to err on the side that even though the market's a bit confused of what it wants to do right now, there appears to be at least a slight negative bearish type bias to it, and that there's a chance we're going to get more negative or concerning news than bullish news the next few weeks. Things that can just concern people, create a little fear. So we think it's going lower. At the very least, it's going to go sideways and kind of torment us of what does it really want to do, okay? Now, we have downside objectives of when it can take out the low of 5829.53. That would be the obvious evidence the level 1 trend is still down, okay? We have evidence it might bottom above that, and that it's already bottomed for level 1, or it can bottom for slightly higher later level 1. But we also have evidence the market could trade below 5,800 and might even trade down towards 5740s. It can collapse all the way to 5,500 or so. Don't really believe we have the fundamental information to do that, but it's just on the table for a possibility. We've also learned within this range right here, we can do what's called a point and figure chart, and it is now showing there's enough potential built to go to 5,500. So we now have two different ways of calculating what might be maximum downside, what might be panic kind of selling downside. Again, that's not what we're forecasting. It's just on the table of something we can consider as it's moving lower. My thoughts are it really ought to take out last week's low, but maybe on a small amount, and that may be all it needs to do. I think at worst, it might go back to the low of election time, wipe out the entire election rally, and put it back to 56.96 or about 5,700. Now, we have all this debating going on, how this is really going to unfold in the next few weeks, because it looks like it ought to go lower, but it also is time to bottom and may have bottomed for level 1. And it's going to be a bit tricky on us as we move forward here. What occurs once that level 1 bottom's in place? Well, the model hasn't given us objective yet. It's given me a couple of clues, and I agree with it. It ought to rally from this time frame and rally sometime in February, perhaps rally even into March, but it also then ought to set back, say, late Feb into March, late March, for a level 2. Then it ought to rally, ideally, higher still, going into April, May, June, and then set back, perhaps a sizable amount, perhaps not, April, May, June, July. Then we should start the process all over again of starting higher into late summer, and then we're probably going to run into that seasonal bearishness or messiness of August, September, October, but it can also be a level one down move yet again. All right? And the point is that whole business all the way to October can still have an upward bias, zigzag higher. We can get record highs and yet still have a sizable move into a level one bottom in April to July, sometime August and October, and might be -7 to -11 to even -13%. And it might even be something more serious than that, like -20%. Doubt it, but it's on the table. History shows it's done it in the past. What this is telling us is there's a lot of conflicting information here. Just because of all the things the Trump MAGA Republicans want to do, they've got the power somewhat in Congress to get it done. And Trump will steal whatever power he can get it done, regardless of Congress, if he really wants to get it done. Therefore, we could have a lot more changes in what we normally see with a president, of taking us entirely opposite direction of what this country has done for decades, centuries, okay? It can be big change. And therefore, it can impact economy. It can at least impact people, how they think and behave, that then can impact consumption and production, business, consumers, and impact the economy. So it can be directly, indirectly. It can also, therefore, impact the stock market, and it can impact the stock market more than the actual economy even. It can impact the stock market when maybe the economy actually shrugs off what Trump does. We just don't know. All we know is normally we would see these level 2, level 1 fluctuations anyway, so Trump is not going to change that. The overall structure will stay. What the Trump stuff will do is change how high or low we might otherwise expect if we'd had someone else, if we were doing something else. All right? So just keep in mind, even though it ought to go higher in April, May, June, July, we are considering the market may not go to a record high for all of this year even. It may be sideways. It may be down into April, May, June, that the level one top in April, May, June will not take it to a record high. We don't know for sure yet, but what we're saying is, you know what, we ought to buy the level one anyways and see what we get. Because if we get a record high after February, and you might even want to consider a record high in Jan, Feb as just as good as after February, get a record high, that's likely a sign the market is going higher into 2026, okay? But we're still going to get level one down setbacks. And for this minor long-term stuff, we're still going to get a minor long-term LT3 bottom sometime now into October. That can cause even more downside along the way, even if it's going up. All right. So for the moment, I'm approaching this. Let's gamble on the side. We might actually be in a bear market, but I'm now thinking there's two types of bear markets, especially with these LT3s. There's one that just takes a fair amount of time when the market basically doesn't do anything. It's based on time. Then there's one that is actually down, and it may be down briefly or a long period of time, a combination of the two. All right. And we just don't know for sure. We just know this bottom is out there looming. All right. So will that bottom occur this month in early Feb for this level one bottom? And the way I look at it, unless I can get the S&P 500 to 6% or more down, and hopefully get the NASDAQ at 7% down, I'm going to assume it doesn't work. If we can get minus 7% down in the S&P 500 and the NASDAQ can be more or less, I don't particularly care, it'll likely be more, then I think that's enough evidence to err on the side. Let's gamble that's a long-term bottom. If we don't get that criteria, that performance, we should assume that we're going to get a hit later. And if we can't even get to a record high by April, May, June, I'd be concerned we're going to get that hit, and it will take it lower in April, May, June, July than what we're doing now, okay? But if we can get that record high, that might save us that it won't go lower than now, that we're stair-stepping higher, but we have big setbacks. We move 2 steps higher, move back 1.5. Then we move 2 steps higher and maybe we get 1 back. And then we get 2 steps higher and we get half a back, something like that, where it does get better. I am concerned this market's not going to perform that well the first half of this year. The better performance is latter half next year and maybe even the following year. And it just basically looks to me that it's more on Trump stuff, but we are seeing some slippage in the overall economy right now. We have more unemployment data coming here, I believe, this week, and we need to assess that. All right, so you know the downside potential. It can go to 5,800 to 5,500. You know that it can go lower into early Feb. It can bottom now and may have bottomed. We know that, yes, there's going to be rallies throughout the year, but some of them may be weak, and there may be more downside after than upside. We know it can stall here for quite a while. It can be somewhat down. But we also know that overall, the market can work higher into 2026, 2027. So let's not get too bearish about that. And we know that we got some things that are different where we probably have to wait to actually see what the Republicans do and Trump does. Now, something I noticed is possible Trump is going to try to pull everything together into one bill. And it's possible that bill won't be voted on by the total Congress and wrapped up into about April, maybe a bit later. And of course, we don't know how much fighting and arguing they'll do along the way. Well, I find that interesting that they were mentioning April might get wrapped up, okay? Because that's putting in the time frame for a level one bottom and maybe the better time for the minor long-term bottom. It may be the market wants to go down or sideways until it gets that portion done and then goes higher, all right? So the best I can tell you is we want to buy to level one. It's not as bullish as we had hoped, a year ago, 2 years ago, but things changed because of the election, all right? And it may be very bullish. We're just going to err on the side, and if we have to sell it after buying at level one, that's fine. Let's do it. All right, so how are we dealing with this level one? Well, again, if you're more bullish than I, if you think it's up and away, everything's great, whatever Trump does is going to be great, then you want to assume it bottomed last week. How are you going to manage the risk if you're wrong? Consider, what if it goes lower by next week, the following week, but then is up for weeks and months, okay? What if it just bounces a little bit and lowers still into early Feb, okay? Then it's up and away. How are you going to deal with that, all right? And right at the moment, I don't have a lot of insight. Which is the better moment for that bottom? I'd really love to see this market come down in next week. Then maybe I can be a little more encouraged to nibble at this. Maybe the model will even trigger a signal. I think moving forward, give me a positive week. I think we better close our eyes and go for it and say it's going higher and higher and higher. Just realize it can have -7 to -11, maybe even -13% setback sometime this year anyways. Even if it is going up for the year, it can still have that big of a setback. Okay, 1996 analog says you can have that big of a setback and get it done in less than 2 months, span 2 months. The 1926 analog says not only can you do that, but in 1926 it did that by February, March. We're working on it December, January, maybe early Feb. That's fascinating. It could be that history is repeating. But I must say, we're seeing some people who are getting discouraged over all this AI business. They don't know how much they want to bet on it. All right, here's MAG 7. It was looking bullish. It was looking fun and dandy, but now we got a negative week. It can go lower. It can stall out for a while until it goes higher, heading back to $58 for this fund, which the symbol is MAGS. I think we want to give it a chance to go lower. They've changed their mind. They started out quite bullish. Now they've changed their mind. NVIDIA changed its mind, and the head guy at NVIDIA made some comment about some new type of quantum computer may take 25 to 35 years to be here. That disappointed the market, okay? I think they overreacted to that news. I think they already wanted to sell, and any bad news was going to scare them, okay? But that looks pretty ugly to me. I think NVIDIA needs to back off. However, got something interesting for you. NVIDIA, long-term wise, should not have gone higher this month. Now, I'm not a stock picker. I wouldn't doubt my models are not as accurate if applied to individual stocks, specifically just the pattern, the price patterns, the cyclical trends and patterns. So who knows for sure? Maybe that's a long-term top. But I wonder if NVIDIA has given us a clue. It is going higher later this year. But in the meantime, it looks kind of ugly here, that it wants to back off, okay? Now, this means what's going on with the equal weighted index? Well, it's already been ugly, and it already is due for a level 1 bottom. It already is oversold. That ought to mean limited downside. Yet I'm still looking for it to pull off this 5-week average and come down to still lower lows, but I think it's rather limited downside. I think that's the way to approach the overall stock market. Is it ought to go lower in the next few weeks, but it may only go just a little bit lower. It's getting ready to move higher into April, May, June. What we don't know is Trump might cause some problems for that thinking along the way, and then again, he might even help, okay? I think if it starts trading back above the high of this week for this particular index, okay, above 7212.33, and my symbol for this index is $IQX on barchart.com, and it's called the S&P 500 Equal Weighted Index. That could be a positive development, and we'll want to be looking at those major indexes at that time, see if we're getting any confirmation, any proof. Here's the Dow Jones Index. Looks very much like the Equal Weighted Index. I'm really impressed with this. Been going on for a while. It still has plenty of time for level 1, plenty of time for that minor long-term bottom. It's basically the same story. But if we start seeing the Dow trade above, more likely close for a week above 43,115.31, we probably got a level 1 bottom. We get an up week anytime. I don't know if I want to do it this week. I'd rather do it next week and beyond. We get an up week, probably got a level 1 bottom, probably want to call it and be a bit bullish here on the overall stock market. Now, the percent stocks over the 200-day average still does not look good. It's trying to pull back as of yesterday. They slammed it down earlier this week, bringing it back. Still doesn't look good to me. And some of the technical people last night were discussing a little concern this breadth is weakening. Things aren't quite right. We may run into some problems for a while yet. The percent stocks for the NASDAQ, really not doing much of anything here, though. Not acting all that bearish, okay? If we do the same study for the Dow Jones, really not acting all that bearish here. So a little bit of a mixed picture. And thinking there's really not enough evidence here to be quite bearish this market. All right, here's the NASDAQ Composite Index. I don't like this week's action. I think it needs to go lower, test last week's low, maybe lower yet. I think it's supporting our price outlook. This is the NASDAQ 100 cash, same story. I just don't like the looks of this week. I'll look at the daily chart of that one soon. This is the interest rates. This is the one I think is bothering the market. And if interest rates will back off, I think the stock market's going to rally on us. But ideally, interest rates are going higher over the next 2 to 4 weeks, and we do have the Federal Reserve coming in later in the month. All right, interest rates are overbought, therefore the bond market price-wise is oversold. We're getting closer to top. I think we're going to see lower interest rates in February, perhaps to March, which probably means we're going to see a higher stock market in February, March. But that fits well for us looking for a bottom now into early Feb for the stock market, okay? All right, next up, I want to take a look at, I need to go back here, and I want to look at what's going on, interest rates intraday-wise, and it's pulling back, but I'm not convinced we've seen a level 3 top. I think it's going higher next week. It may go higher even by tomorrow or even starting today, but I don't know how much higher. They may start stalling out into the Federal Reserve here. All right, but it's something to keep an eye on. The dollar index is a little more important these days, and it's holding near the highs, and I think it still has upside potential in coming weeks. The stock market won't like it. But if the dollar index trades below the low of this week, we probably got a level 1 top end, and the stock market might like that we get a lower dollar. Okay, now I want to go to the NASDAQ and I want to go to the daily 100 cash because this was one of the better indexes right now. We always favor the S&P 500, it seems like, but occasionally we pull in the NASDAQ for better clues. Level 3 top, very convinced of that. Level 3 top, very convinced of that. It is a sloppy level 3. It was broken in halves. That does occur a small amount of time. We believe the move is down into a level 3 bottom next week. We don't believe this is the major bottom we're looking for. So we think it's got to go down and we want to continue to look for it. We realize there are things that are wrong. If this index starts to move back to 21,800, we're missing out of something if we haven't already called a bottom. We better jump on board. Here again, moving forward the next few weeks, we get nice up weeks in any of these Dow Jones, NASDAQ, S&P 500 indexes, and maybe some of the sub-indexes. We have to start thinking, oh, it's bottomed. We're ready to get going, okay? In the meantime, it looks like this ought to go down. I think it blipped its head up and bumped its head on the 5-day average yesterday. If it does go a little above it today, that's fine. But I think really it should be going down into Monday for the level 4 swing, maybe even down now into Friday for the level 4 swing, and then on into Monday. I also think it should be going zigzagging lower into sometime next week to the following week for the level 3. I think it adds up with what we're saying of the S&P 500. I think the overall stock market should go lower into next week. Then we will reevaluate. But I am looking for reasons to be wrong because we know we're in the time frame. We've met minimum requirements to bottom for something more important and to start an up move. But I don't think it's here now. All right, let's move out and take a look at long-term analysis. This happens to be the futures chart, but it's a monthly chart. It's so long-term that it's pretty much the same patterns as the cash chart. All right, we've got a month when it started up, and now it's having problems, difficulty. It's pulling back. It's acting like a negative reversal month. It doesn't have the traction, doesn't have the demand. All right. However, it is hovering near the 5-month average, and I've noticed for these intense bull markets, when it dips below the 5-month average, it normally doesn't stay there. It goes back above it. So we have to watch out for that. And even if it closes below it, we have to watch out that the following months can be above it. We have to realize this average is still in an uptrend. Actually, when we look at lows and swing highs within this trend, the trend is still up. This pullback really hasn't damaged anything in terms of a long-term bull market. Nevertheless, we know things can go wrong all the way into October. This market can go down. It can have difficulty moving up. Okay, we know there's various periods for these level 1s to occur within this time frame for the long term. We know there can be downside and considerable downside at times. However, we also know we have outstanding long-term targets, meaning even if it stayed down all the way to October, it can go up like that into 2026, 2027. We don't want to miss out of that. We don't want to be overly bearish. How am I approaching this? To simplify it, I'm saying I'm long-term bearish, even though that's probably not the correct label, depending on people's definitions. But I'm going to say that I'm long-term bearish. And maybe all the way to October, and maybe only to April, May, June, July. We may learn that if they hit this by a gigantic amount in just the next few weeks, that it could be all over then. We just don't know for sure. But once that bear move is over, we should see higher prices because of something much larger and bullish for this decade. So I don't think this is any kind of end of world scenario. This is a nice setback. This is an LT3 bear market right there. That was because of inflation. We're due for another LT3 bear market. It might be just as severe, but history going back more than 100 years suggests that if you get this large of a bear market and that important of a news and development, chances are this will not be so important. So the Trump stuff probably won't be that negative or bearish, all right? But until we can get a trade above the high of this month, and more importantly, get a record high, I got to give the bears the upper hand at least for the next few weeks, and I may have to give them the upper hand all the way to October at times. I may have to flop, okay? It's just the way it is. It's what we've been dealt with. It's the kind of card game we're playing right now, okay? Lots of fuzziness, messiness can occur. So if you're wondering about those monthly highs and want to write them down on the S&P 500 cash, trades above 6,021.04, there's a good possibility it's going to record highs. And we have seen the level 1 bottom. But we might not have seen the minor LT3 long-term bottom that could still cause problems down the road, okay? Now, if it trades to a new record high, meaning it trades above 6,099.97, we want to assume it's going higher into 2026 but we might not have seen that LT3 bottom, meaning it can still go down huge amounts along the way and then right back up again. Okay? And we'll have to watch out for that. All right? If it goes to a record high this month, I still would feel better seeing a record high after February. If it goes to a record high in February, I still would feel better about a record high after February. And the next piece of evidence that it's going to be higher next year is we need a record high after August of this year. Okay? So those are some things you want to write down for guidelines throughout this year, and just realize this market has gone, this bull market here, right from 2022 to now, this has gone long enough. We can have a big down move stall out for a long time and then actually still be bullish later this decade. And we just realize we got all kinds of things coming at us news-wise. That's how it might work, okay? That's all there is to it. That's how it might work, all right? All right, the VIX moving up. They're not betting on the downside and ensuring themselves, protecting themselves that much yet. But the model's warning the VIX ought to go higher into next month, suggesting the stock market can lower into next month. Well, we just said it can go lower into early Feb. We might see that it doesn't go much at all, doesn't really work. We might see it explodes because the stock market suddenly drops. We don't know yet. I do think VIX is going to be a little more lively this year, but choppy, range bound. It is going to be warning of problems as we deal with Trump, but overall, it's probably saying we will deal with it. Life will go on. That as long as Trump isn't doing things to really hurt corporate profits, probably the stock market's not going to care that we're hurting people. It's probably not going to care we're boosting unemployment. It thinks that's the cost to change how we're doing things. So the stock market could shrug off quite a bit of the negativity, but there's going to be fears that something might go wrong. Now, the global stock market looks like it can pull back more for some countries. Other countries are finding their feet. I'm really still surprised of Germany, of how well their stock market's doing, and yet every day all I hear about is how their economy's not doing well. And I've heard this for 2 frickin' years. I've come to the conclusion we just shouldn't pay any attention to what these people are talking about. I just don't get it, okay? Now, maybe there's going to be a sudden break, but I don't know. And maybe there's going to be somebody certainly betting it's all going to work out. France has had some issues. Spain's ready to shrug it off, okay? But where are we going with all this tariff stuff, all right? Well, we're ready. The whole world's ready to go to war with the U.S., so we have to think about that as well, okay? All right, I'm trying to think of some fun news and developments here. We know the percent 10 stocks within the S&P 500. That measurement is the highest it's been since the 1929 crash. So that is a warning. Something could go wrong. I don't know it's truly predictable. It doesn't have to go wrong. It's just a warning something's not quite right. I'm afraid the AI boom has kind of overdone it. I think we're setting up for a bubble, but that bubble may not pop until the end of this decade. But it might still lead to some setback, that NVIDIA and Mag 7 don't do well this year and then better later. There's just some issues to watch out for where maybe things are a little too bullish and optimistic right now, okay? We're seeing various measurements where some people have already turned a little too bearish, but other people are too bullish. Again, some of this mixed stuff that is causing some issues. How do we want to behave with this? All right, now this is the 12-hour chart of the S&P 500 futures. It's trying to move higher. I actually have it down 9.5 now. It might bump its head on this little line. I think if it starts trading below the low of 59.29 for the March E-mini S&P 500 futures, not a good sign. It ought to be lower tomorrow. Okay, and if it doesn't do that until tomorrow, then I have to reevaluate whether that means lower into Monday, or is it too late? It's already the bottom. What bothers me of being bearish here in the next few days and into next week is this indicator right here. We're finding this in many indicators for many different markets, sub-markets, that's suggesting the downside ought to be limited. Nevertheless, the best forecast is I want to wait the next week. But I'm telling myself, see how wild this has been going up and down? We might be setting up for another wild up move only to bring it back down again. Right at the moment, I'd like to see it just move down. Then I can be more prepared for upside down the road. Want to buy this sometime now into early Feb. I might buy it as soon as next week. I'm finding it very difficult to do it this week. I got to wait. I got to give it a chance to see if we can get this down a little bit more at least. And I'm also wondering, it does feel kind of heavy, like increasingly some people are giving up long term. They're saying, I want some of my money in cash, and I want to wait quite a while to see where we're going with all the Trump right-wing stuff right now. Past results are not necessarily indicative of future results. Have a great day, great week. Thank you. Again, bottom line is, I say it's going lower today, maybe into Monday. I say it's going lower into next week. I say we may have downside all the way into early Feb, but I actually want to buy it next week into early Feb and give it a chance to see how well it does February, March, on into April, May, June, July. Thank you.